It is July 26, 2020. It's Adam coming at you from the highest return. Today, I'd like to talk to you seriously about cash and lending and interest rates and all that fun stuff. So as y'all know, the US dollar can be printed or created by the Federal Reserve Bank and lended to the US government for interest. And banks don't have to keep the same amount of money that they lend out in-house. It's called fractional reserve banking. I'd like to say that stocks offer some protection from the dangers of holding cash, but unfortunately there's a lot of really unscrupulous, I guess you could call them company management out there. And what they do is they issue more shares to themselves and their employees, as well as make public offerings to raise money for their companies. And a lot of times they do that when they know the share prices are trending on the high side. This is basically stealing money from the people who have already bought stocks of a company, because those people who bought stocks don't have a huge say in whether the company issues more shares. So let's just say that I own 10% of a company. The company could potentially issue like double the amount of shares that they have, and thereby reduce my stake, and I would only own 5% of the company afterwards, which for sure means that the value of my shares has gone down. What they do with the new shares, depending on how they do it, they can issue it to existing employees with basically a stipulation that those employees can't sell those stock options for so much period of time, so it doesn't really affect the stock price in the near term. But it still does affect the stock price because other investors are wise to what's going on, and basically they won't value the company as highly, knowing how many new shares are outstanding. So when you do invest in the stock market, I would suggest looking at the history of how often they issue new shares. Typically with newer companies, it's more likely to happen, or companies that have a suddenly newfound interest in them, such as Moderna, which kind of pisses me off when they do stuff like that. I guess do your research. If you're fed up with people or organizations or entities devaluing the value that you have in different instruments, be it cash, stocks, whatever, you may consider going into real estate or just buying things straight up. You could buy art, you could buy gold, you could buy silver, you could buy palladium, you could buy, I don't know, guns. Whatever retains value is something you could consider doing. Where you live in unprecedented times with what's going on and how the government's spending money, and of course there's always a rationale behind any time it spends money, but when inflation does happen, they're not going to reimburse everybody for the value that they lose through inflation. And this is not a political thing. It happens on both sides of the aisle. It happens with the Democrats and the Republicans. They both do things that devalue the currency. So yeah, do your research. Look at companies that have good track records with their shareholders and not issuing new shares. I think one stock that comes to mind is Berkshire Hathaway. That's why their Class A stock is so freaking expensive. The other thing is precious metals. If you're looking into real estate, if you can leverage it at a lower interest rate, then you are taking advantage of the system in place, which is really a system that, well, it punishes people who don't pay on time, of course, like credit card holders, people who default on their mortgages, people who get foreclosed on, and also people who get crappy interest rates. They're being taken advantage of. But if you can get a good interest rate and buy a tangible piece of property using leverage, for example, real estate, I put it on your watch list at least. It may not be the best time to buy now, but it might be the best time. It depends on how inflation goes. So that's my little spiel for today. Hope you all have a great day. Bye.